Guys, welcome back to the Independent Investor Channel. This is going to be a review of the self-directed Roth IRA account number 2. The elephant in the room is this is the one with the large Hyliion holding, ticker symbol SHLL, soon to be HYLN under the new ticker symbol of Hyliion. You guys will notice that this account has swelled in value, okay? The stock has done what you want any stock that you've done due diligence on and done some research on to go kind of parabolic on you. That's what it's doing. That's fine. It doesn't always work out that way. I'm still not counting my chickens before they hatch. We want to see this position materialize into where I think it can go. I'm really trying to avoid selling the stock prematurely. I don't want to see that happen because I'm really trying to attach a good piece of value on it, but we're going to chronicle that holding in this account is 600 shares. We're going to keep 100 shares, and we're going to look to take some profit here on a 500 share block when it hits where I think the mark is going to be. We'll talk about that a little bit, and for all you value investors out there that are tracking with the other holdings, certainly we'll provide that value to you guys as well. So sit back, please enjoy the review. So this will be a review of the Roth IRA account number 2. This is a self-directed account. This has about 5,000 of cash in it and about 112, just shy of about 112 in the account at the time of the review. So we're going to run through these rapid fire so I can just kind of cover some of the highlights of the portfolio. And this again has some really nice single stock exposure, some dividend growth, some speculative play, and some passive ETF exposure. So I'll highlight those as we come to them for sure. Starting off with Bbl Bhp Billiton. Needed some exposure to some materials, and I do own the materials sector ETF elsewhere. So I thought I would just go ahead and embolden the dividend yield on this. BBL's nice. It pays a nice dividend, and it's really come off where I bought it. Just of course disappointing after you buy it, and it just takes a nosedive. So we've given back 8% in the name, which is somewhat disappointing, but that's all right. The exposure is more important to me to the materials aspect. I really needed that piece. I was really lacking that when I looked at the total picture. And so that's how we grabbed it. Next is Cisco, another real tough position here. This is not what I expected at all, but nonetheless, this is in the old tech category that I am bullish on with IBM. I don't own Intel, but Intel has probably got the most identifiable problems out of the others. These businesses are well run. They're doing fine. The stock has just kind of come off a little bit, and we'll just continue to enjoy the dividend here and hope for better days into the future. We'll continue to strategically buy it. No big deal there. I worry not about Cisco, probably one of the best companies that's ever existed in this country, and Cisco Systems. Next is Chevron here. I think it's the only oil play that I have in this portfolio. Probably the best run oil company that I do own out of the 3 majors. So relatively small position, not too worried about this. This is really just more of a positional play to get myself some exposure in energy and just to round out this portfolio a little bit in the sector, get some exposure through Chevron. Next is Goldman Sachs. Goldman Sachs has been really nice to be able to pick up here. I don't think this is going to remain in the low 200s for very long. I do see this catching some fire. Really nice Dow component here in Goldman. Been one of those companies that I've watched for years, and I've always wanted to own it. I just think they're a wonderful worldwide global business in the financials. This portfolio really does have a theme of being fairly heavy in financials. Some of the other portfolio accounts do have some themes in them. This probably one of the major themes is financials in this, and just glad to own them. That's fine. I've got some of the major banks as well in here, and some really nice positions in some industrials play. So a good spackling of diversity across all the sectors here. Honeywell, probably my favorite industrial play anyway, right here at 25 shares. So a pretty nice sizable position here. And then JP Morgan in the major bank category, probably the number 2 pick right now in financials behind Citigroup. JP Morgan's a nice financial play here. Really just still trying to recover, and it will. We were down significantly more than this, and we'll continue to improve upon this position when these positions come back to even. This portfolio is really going to catch legs, and it's really going to do nice. But right below that, Kraft Heinz Food, which has been nice, caught fire there for about 3 weeks, and that's been about it in the last 3 years. So coming off somewhat of a scandal of their own, really didn't get televised very much, but some accounting malpractice there in Kraft Heinz. But nice dividend payer to boot, and it's a buy in the low 30s. It's an easy company to own. Really one of my favorite staples companies anyway. Next, 3M, one of my favorite industrials, one of many. And we've taken this into some absolutely brutal territory. Brutal. Being back up to in the mid 160s. Very nice. It's kind of in an uptrend here, a bullish uptrend, erasing some of that deep water loss that we've had. Been paid the dividend throughout this downturn. It has not taken any type of reduction or suspension on the dividend, so that's great. Nice, clean, over 30 share position in 3M. Next is Merck and Healthcare. Merck's just been a really nice performer over the last couple of years. I mean, what can we say? It's been a doubling position, and we'll keep these shares long in here. This portfolio is really nicely set up, nicely to benefit going forward, with Merck and Pfizer both in the same portfolio. So a nice spackling of major big healthcare in this portfolio. Right in between it is Realty Income. It's the only REIT that I own in this portfolio, 120 shares, so it is a rather large position, right where I want it in the Roth. It's obviously done quite well. I just think, its entry in the high 40s during the pandemic was an absolute gift. We won't see that again. I think here in the low 60s, it's still undervalued. So obviously a nice run up. I'm happy with the cushion there. That's fine. But I really don't own it for the capital appreciation. I really do own this for the quality of the company. I own it for the dividend yield. Having it being paid monthly really doesn't matter to me too much, but it is nice. It's like winning the lottery every single month when Realty Income pays. So Pepsi at 49 years dividend payouts. Nice sizable 35 position here. It's done quite nicely. I've had Pepsi in some deep water, so I'm glad to see any type of green in this name. I'm just stoked to see it in the green, to be honest. It's more indicative of where the company should be, to be honest with you. One of the best staples play, I think, out there. One of the top companies you can own forever, definitely in my top 10. I don't know if necessarily I would put it in my top 5. You could, but it's definitely in my top 10 of companies to buy and own forever. I already talked about Pfizer at the 4% yield. It's actually come off of a little bit, which is surprising. And I think it's probably provided a nice re-entry into the stock for you guys that don't own it or want to increase the position in Pfizer. I think it's provided a nice entry here, waving at you at 36. Very, very nice entry. Procter & Gamble's been nice, just a silent killer in the portfolio, up over 10%. It's just been really nice. It's been out of the headlines. It had a rough patch over the last couple of years, no doubt about it. Procter's just been beat up through the Nelson Peltz, the board requests and his insistence on, his strategic vision and influence on the company, and we haven't heard squat since then. And this company has just been silently moving up. One of those top companies that I say you can buy and own forever. It is in my top 5. And so it just wouldn't be the same getting staples exposure in the portfolio without PG, and we've got it right below it. Philip Morris, also in staples. It's nice. It ran up initially when I bought it. It's off a touch. That's fine. Just nice to see it in the green. That's fine. Nice dividend to boot, and this is just a nice addition here to round out the dividend yield in this portfolio. Nice to see it run up of where I thought it was a nice entry at 76, I believe is where I picked this up, maybe even lower than that. So really, really nice there. So Tortoise Acquisition Corp here at 600 shares, just over $50. We'll continue to watch this closely, paying a little bit more attention to this position at just over 30 grand. It's obviously performed nice up over just a little bit over 17. That's fine. I'm not really too overly concerned with this. It's obviously what you want to see in a stock when you invest in it. That's all fine and dandy. But my long-term strategic plan for this, I'd really like to see play out. And it plays out like this. 500 shares will be liquidated at some point post-merger. And we'll keep 100 shares tentatively on that long, as I do believe in the company. I really do. But obviously a little bit stretched on my tolerance for how I like to typically invest, but it is indicative of how bullish I am on the company. So it is a trade-off. That's fine. We'll continue to keep a short leash on this sucker, but we're just being patient until the merger, and that's just really my thesis on it, and my thesis on where it's going to go. I've got it at in between 85 and 110. I'd like to get it up above 3 figures. I think that would be lovely to take it up over 100 per share. That would be great. Maybe even 110 would be kind of like an icing on the cake here, at a valuation of about $20 billion on the company. So we'll see. We'll continue to monitor it, and we'll adjust accordingly as we need to. Travelers, again, I mentioned the exposure to the financials sector. Super nice there. It's a Dow component. It is the best insurer out there. There are some other good ones, but Travelers really is going to benefit on its international aspect of their business. So that'll be fun watching that going forward. Visa is a cornerstone. Holy moly. This company is just a juggernaut. It's come off of its high a little bit. That's fine with this market give back a touch. That's fine. We're going to just continue to own these shares long. The one passive ETF that we do have here is the European ETF. This has come off of its lows as well, so it's actually starting to perform a little bit, which is actually kind of nice. And then Verizon and telecom, so get a little dividend yield here. Verizon's also been kind of a silent killer here. Nobody talks about it. Pays north of 4% yield, and it's just a phenomenal company. Why would anybody want to invest in it? I have no idea. Anyway, it's doing quite well, doing what we need. Wells Fargo, I'm not going to spend a whole lot of YouTube video time talking about this garbage. I'm really kind of pissed at this management company. This was probably one of the biggest disasters of this time period. Honestly, what an absolute embarrassment. And it's great. I mean, those executives will go down in history as running one of the most prestigious banks completely into the freaking ground. So, unfortunately, I'm a shareholder. I think the silver lining is that it will eventually recover, hopefully, but there's still systemic damage being done to the stock, and just on ethics alone, I could justify making a bear case for the company. But I do think the worst is behind Wells Fargo. The stock's been cut in half. Lucky for shareholders like me, honestly, we should have some level of litigation against them, because what they were doing was downright criminal. It was insane what they were doing. I'd love to understand a little bit more ethical application in their processes, and that's the difference between owning a Wells Fargo and not knowing some of that stuff is happening behind the scenes, as opposed to owning a Tortoise Acquisition. Right now, I can judge their executive board of 6 people fairly easily. Not a whole lot of room for shambles, but man, way to take a $250 billion company and flush it down the toilet. Great job, guys. And then finally, Wells Fargo, that's just been on fire. It was one of my stocks to buy last month. If you had just tripped and fallen into this little-known company, you would have done quite well for yourself, up almost 10%. So that's the portfolio review, guys. With that, we'll conclude. We'll kick you back to YouTube and we'll finish up. Thank you so much. All right, guys, so welcome back out of the account. Really hope you appreciated. This account has really done well. Over the last couple of years, it's actually lagged my account for a couple of years. And just here recently, some of these holdings that I've really held true on, 3M, for example, have really come on strong. Walmart is one to note. These companies have really kind of caught fire a little bit and done really well for this portfolio, not to mention the run-up in Hyliion in this. The important part to understand is that it is in the Roth IRA, so any profits that are rendered on this trade are going to be tax protected, which is a great thing. It goes along with my strategic advantage on the Independent Investor channel. It's not necessarily what you own, but how you own it. That's the key. If you like what you have coming through the message on the Independent Investor channel, man, you want to subscribe to the message, hit the notification bell, leave your comments at the bottom of the video, and share the message with anybody out there that you think would appreciate the message that we're putting through on the channel. Guys, thank you so much for tuning into the review, and good luck in your investment future.